Hey everyone, hope you're having a good day. My name's Andy. The channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what people are sharing. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com. I dive deeper into all of these topics and subjects, looking for potential investment opportunities, sharing them with everyone on the reasons why I like the technicals, the fundamentals. I go over a lot of different things that people want me to cover, portfolio allocation, a whole bunch of different things, whatever they like. If that sounds interesting to you and you want to be part of that community asking those types of questions, we have a special going on. Special is the coupon code. Look in the description link for the special. Clearance Bodicker. He says, wow, capital rotation from SPX to gold, a process. Turn started in 2016, left shoulder. 2021 is the head, and 2024 is the right shoulder. At no point has the turn itself been in question. C wave has started and will rock the investment world to its core. As fared 1929, 1976, so fares 2024 plus. And then he has silver on the back end. So what is this? Well, these are the cycles, the major cycles of the commodity bull market. He's measuring it through the SPX and gold. So this is gold divided by the S&P 500. That's what this chart is. And you can see the big cycle going up and down here. Now, this cycle is supposed to go all the way up to the peak here. It looks like to me where the orange dot is somewhere around 2029. And that makes sense given the real estate cycle. And it's given sense of kind of where a lot of things line up on the charts that I do. It says late 2020s, early 2030s. And you can be slightly before this or slightly after. It's not perfect. You can see that where this one was in the 1929 to 1930, 1941 here. Big move lower. Then we had another surge higher here, all the way up into 1980 is the peak. This started in 68. So you can see we've pulled back from an A, B, and then it'll be a C move up there. And we've been chopping sideways here. So the chop is what gets a lot of people. They get impatient. But this is going to come. It's going to break to the upside. And it's going to be absolutely insane for the returns of some of these mining companies, some of the energy companies, just commodities in general, and precious metals in general. The cycle is coming right into the thick here. Rock bottom entries. Here's another one. This is DBC to the S&P 500 ratio. It says tech might have just put in a major cycle top, making it a great day to repost this. And again, this is a double bottom here. And we've got a bullish divergence confirmed breaking to the upside in the ratio. So DBC-SPY ratio signals a long-term shift, capital moving out of the Mag 7 into tangible assets. Hard asset investors will outperform in years ahead. I agree, and we are at ridiculously cheap prices right here. Now, when this goes through at these cycle tops for the S&P 500 and NASDAQ, they can grab commodities lower with it for a period of time. It's that kind of sell everything, pan sell off is what they call it. Sell everything events where you might get margin calls, things need to unwind and shift, and we get thrown all over the place. It could impact commodities as this rotation starts here. So I'm excited for it. This is what I've been accumulating for, and hopefully it is an easy ride and not a volatile ride where we're going all over the place with gigantic 50% pullbacks. I would love a nice, easy ride with 5-10% pullbacks above a 50-day moving average that goes all the way to the right up into maybe early 2030s. Nice, easy ride, kind of like the way that we fell here. If I could get that same type of move up, oh, that would be a dream. I don't want to sell out too early. A lot of people always ask me about selling questions. When do we sell this? Well, number one, we're really early. We're like at the bottom of the bottom here. And then number two, you're going to have to see a lot of these ratios shift. Basically, we would be selling like we would be selling tech stocks here. You'd sell a little bit earlier because you wouldn't ride it all the way to the top necessarily. You could go a little bit earlier when the ratio bottoms, and you might sell out a little bit early and swap into very undervalued assets at maybe a market bottom when there's max fear. And that's when you pick up your tech, your S&P 500, whatever else. But that's a ways away. You're talking probably 5, 6, 7 years at least. It might even be more than that. It might even be a decade. Gary Savage says this will be a major buy spot on a lot of things. Stocks, of course, but also Bitcoin, maybe energy, and of course metals. Just be patient for a few days and let the panic hit a crescendo before pulling the trigger. That's Gary Savage's opinion. He thinks that there's some more selling pressure ahead of us, and that very well could be the case. I really try not to. Making these market calls are extremely difficult in the short term. A lot of people get it wrong a lot of the time. So I'm going to be no different than anyone else. So I just stop making short-term market calls because you're going to get the majority of them wrong. So gold and silver performance following first test of 200-day moving average after gold breakout to all-time highs. So I have another one below this. It's kind of out of order when you go and search through these things, but gold. So after its first test of the 200-day moving average, gold is broken out to all-time highs. This is the performance after that first test of the 200-day moving average. Gold went up 192%, 331%, and 80%. Silver went up 285, 713, and 228% in those advances. Those advances were 15 months, 14 months, 18, and 14 months. We'll share this again when gold tests the 200-day moving average. Someone shared this with me, and what this is, you can see it's turning up, this is the ISM Purchasing Managers Index. This here was the last time energy went ballistic. It bottomed in March, April of 2020, turned and ran all the way up into 2021, kind of like summertime. Energy went all the way up to 2022, but and there could be a little bit of a lag of inflation, but this turned higher last time, and we've got another turn higher, and we've got that double bottom here, and it's a breakout of the apex here. So that looks pretty good for the ISM Purchasing Managers Index turning higher. That's generally inflationary. Final year of London gold price pool, 1961 and 1968 failure. There was a time in 1968 when platinum was 10 times gold than artificial price point globally. Now, Q1 2025, platinum is a third the gold's price. Such is how wild modern PM price discovery swings. So he's talking about the ratios. Back when gold was held down, Clown World is what he's got it, platinum was 10 times the price of gold in terms of that ratio. But this is long-term platinum going back all the way to 1885. Look at the size of that move. Think of this, some people are probably thinking wave one, wave two, and we just keep going up and they consolidate in these areas here. We're in another consolidation. There's been 3 large consolidations that I can see here. There's one that started in 1920, went all the way down to 1930, and started moving higher off this double bottom here. We had a huge advance from 1946 all the way up to 1981. Yeah, 1981 or 2. We consolidated in a 3-hump consolidation. Broke out of that, another big move from 98, 99, 2000, all the way up to 2011. And then we've consolidated since. So we're primed for another breakout in platinum. Platinum reports being in backwardation are real. Snapshot yesterday, cash spot greater than the platinum out in the future. The backwardation means that futures contract price is lower than spot price. Considered a bullish sign with supply tightness and strong demand for an underlying good. And then we've got gold versus platinum. So platinum futures contract spread. There we are. And then the NYMEX platinum inflows have been chunky like COVID 2020 inflow area, similar to COMEX gold silver inflows. There were mass platinum bullion withdrawals in 21-22, where mostly went offshore to China. Platinum's not a monetary precious metal, but as rare in the ground as gold. It's actually far rarer than gold. But PHYS is far rarer above ground versus physical gold bullion jewelry holdings. Gold to platinum ratio recently eclipsed +3. Next tweet, see 1970s ratio. Once ounces at 1K should store value long-term regardless. This is the gold to platinum ratio, moving all the way up to 3. And I guess this was the beginning of the data there. But it's a big bowl shape. And maybe we go all the way up. No, we're not going to go all the way up. But we've been going higher in this. Platinum was 5 times more expensive than gold beginning in 1970 thanks to the long-rigged, recently failed London gold pool price of nearly $35 an ounce of gold at the time. It got even more London clownish a few years prior in terms of a gigantic ratio over here. Looks like we're about to come back up in this platinum to gold. Looks like a big double bottom. Final year of London gold price pool, 61 to 68 failure. There was a time in 1968 when platinum was 10 times gold's then artificial price point globally. Now in Q1 2025, platinum's a third of gold price. And that is it. During Roy Brin, however you say his name, gold's corrections after breaking out to new all-time high. Gold has broken out to a new all-time high and sustained it 4 times. The first major correction post-breakout is circled in the chart. The first 2 corrections tested the 200-day moving average. The third came with 3% of testing the 200-day moving average. Gold exploded much higher after each correction. So these are the little corrections he's talking about. The correction was 14% and it exploded 103. The correction was 20%, exploded 138. Here we had another correction of 14% and we've gone up 73. And right now we're up 82%, and he's perhaps calling for at some point a 200 moving day correction to it, and then a last gigantic spike. But we could be a long ways away from that. Luke Grumman says 2006. Let's pretend people making $7 an hour can afford a $400,000 house to trick pensions into buying AAA-rated subprime mortgage-backed securities. In 2025, let's pretend U.S. debt GDP is not 120%, so we can trick pensions into buying AAA-rated USTs at 4%. The purists, but the U.S. can print money. Gold says, I know. Copper wants to run, you know it. That's me posting this, and you see the 3-hump consolidation, the breakout. We have another 3-hump consolidation, and we're right there trying to break out again, just like we did in this larger consolidation pattern. Copper, I'd be watching it. Looks ready to run here. And it looks really good because, remember, above, we had that ISM Purchasing Managers Index. Well, this is also moving with it. So that's confluence. It's looking good. Dow Jones Industrial to oil ratio, similar looking fractals over time. And when you look at this, this is last bull market in oil. It's the ratio of Dow Jones Industrial Average divided by crude oil. And as this moves lower, crude oil outperforms the Dow Jones. So the peak was 1999, and then we moved all the way down and compressed down into 2008. This is a big compression when you look at the absolute values of 800 down to 76. We have a very similar setup. We have this lead-in area, which is very similar to the lead-in area here. We have a spike, which is a head. We have a spike of the head here. We pull down in a downtrend, break the downtrend, and then we pull back to a very high level here. I've had that circle there for like a year. Here's the circle before. The fractal is the pattern it's creating, and where I think we're going to go is much lower in this ratio. Yes, it's going to be a combination of perhaps Dow Jones Industrial Average going lower or sideways, while crude oil makes a very large advance. And this is the ratio of the fractal that I'm looking at to say, yeah, this could easily happen. It's the same looking thing. And if we compress down to 76, we have a long way to go. Remember, Dow Jones is incredibly expensive right now. Here's some more ratios. I did a lot of ratios today. Oil to natural gas, uranium, silver, and platinum ratios. So it's oil against all of these. Here's oil versus nat gas, 1, 2, 3 hump consolidation, and we're at the tip of this falling wedge. We'll see if this breaks up or not. We've got crude oil versus silver. We've got a falling wedge that we've broken out of and a consolidation on top of that other consolidation or falling wedge. So it's a retest. Maybe we could outperform silver here soon. Crude oil versus uranium. 3 hump consolidation, and then we are starting to move higher. Maybe oil can outperform uranium. Maybe. I don't know. We'll see. And then we've got crude oil versus platinum, and I see another squeeze here into the corner of crude oil versus platinum. And generally what happens is these two metals move together. Crude oil moves up with platinum, but generally crude oil moves up a little bit more than platinum does over time. So we'll see if that repeats and if these ratios are telling us anything on this squeeze up that we're getting into the falling wedges of all these. And here's some more ratios. Gold to oil and oil to gold ratio. I know we've talked a lot about gold and gold just ripping. I'm an oil guy, and last bull market it went from cheap down here from 1999 all the way to the top of 2008. We compressed this ratio from 2008 in a disinflationary environment. 1, 2, 3 hump consolidation, that is the consolidation, falling wedge. 2020 was a capitulation bottom breakout of that falling wedge or that pattern. Came in, hit the peak here, and then came on back in another falling wedge. You could also state, if you put a line across here, it's an inverted shoulder, head, shoulder, right at that point almost. And then if we get a break higher, crude oil would outperform gold. And I do expect that to occur at some point. Oil is incredibly cheap here. We are cheaper today than any other time in history going back to 1984 outside of 2020. Crude oil versus gold zoomed in on that falling wedge, and we can see an outperformance potentially, maybe a bullish engulfing candlestick just starting to form. Obviously, we don't have follow through yet, but it's starting. Maybe. And then sometimes you can see things differently when you flip the ratio. Shoulder, head, shoulder. We're on the right-hand shoulder. If you zoom in on the right-hand shoulder, you can see we're getting a little bit of a bearish candlestick where crude oil can outperform gold if this comes lower. Bullish trends, and funny, I was posting this right when he was, and I had to share it, but XLE divided by XLK starting to break its downtrend here to the upside, where energy is about to outperform the technology sector. That looks really good for energy. And of course, I posted this 4 hours ago. This is 3 hours. I was doing it right when he was doing it. So perhaps a double bottom on oil against the SPX, oil to NASDAQ ratio as well. And again, we got this big, huge double bottom forming. If you zoom in on the right-hand side here, this falling wedge, there's the falling wedge, the breakout, the retest, and we're coming into a nice big green candlestick there. Can we start to move higher against the S&P 500, oil that is? I think it's the case. We could. We'll have to watch it. Here's the crude oil, bear market for crude oil, bull market for NASDAQ, bull market for oil, bull for NASDAQ in a falling wedge, 3-hump consolidation. And then we bottomed in 2020, April. We broke out. And if you zoom in on the right-hand side, we broke out and then another 3-hump consolidation happening, a breakout, a retest. Is this the beginning of the move? Again, I don't know, but it looks good. I like what I'm seeing. I like falling wedges. I like things breaking to the side that I want them to break to, and it could be the start of a big move. Hopefully that's the case. And the NASDAQ's got the same thing. Same thing as the NASDAQ, as the S&P 500. Same chart setup. Here's Uranium Insider, or Justin Hume. He says, according to KEP's latest SUA proposal, production from Kazakhstan, 100% basis, will be less in 2032 than it is today. The decline from there is shocking. An enormous effort and investment is needed to avoid true supply shocks during what the industry sees as tomorrow. Proposed changes subject to regulatory approval. There's the big drop-off after 2030. Big move lower. JP Morgan says, nothing so undermines your financial judgment as the sight of your neighbor getting rich, says JP Morgan. You know, a lot of people were talking about this, about crypto in particular, and mainly crypto, I would say. Some of those things were just going ridiculous. And it probably sucked in a lot of people. And I bet you a lot of people got hurt. When you see that type of euphoria, I just step aside. I don't participate. And I know for a lot of people that's really hard because of that quote, which is true. Nothing so undermines your financial judgment as the sight of your neighbor getting rich. And there's a lot of people that say, well, you missed the crypto bull market. It's like, okay, it's fine. I'll make my money some other way. I don't believe in it. I don't like it. So I don't trade it. I don't invest in it. So be it. Grady, this is from Grady. He says, been saying for years that capital is now rotating into commodities. The capital rotation turn is not coming. It is already here. Been posting, for example, these historical turns and breakouts below in real time. The big ratio chart turns are already in. They are not coming. So the big turns are already in, according to Grady. And we are ready to potentially start outperforming all this stuff. This Dow Jones versus gold. This is the Canadian CDNX versus the CRB index. That's bottoming. We had some other ones back here. CRB index versus Dow Jones. That's bottomed. False breakout, and it's moving higher. We had our first nice little bull flag going on there. And if you notice this, guys, that's a 60-year bullish falling wedge. 60 years. Do you know how crazy of a move that's going to come when we break this? He said back in March 2020 that this 60-year blue falling wedge would reshape the investment world. It did and is. Called the false breakout, real time. When the ratio moves up, commodities outperform the stock market. Yep. And there's gold miners versus semiconductors. Again, 17-year perfect bullish falling wedge, saying a historical global sector rotation and change of capital flows is in the making. Totally agree. Here's Kevin Banbro. He says, so a tree is both standing and falling in a forest until someone observes it. No. And I clicked on this and I was reading. If you think about it, this can only be solved with an all-knowing God. Nope, where the grass is always greener. I think it's neither until someone observes it. No, that's not true. You don't need anyone to observe something. If a tree falls in the forest and it's laying down, it's already fallen. So it doesn't matter if someone can hear it or see it, it still fell. um, so, yeah, it doesn't matter if someone observes it or not, the tree fell. As an investor, you love volatility. You love the idea of wild swings because it means more things are going to get mispriced and people are not going to take advantage of it. People usually get scared and they sell at the exact wrong time. That's called panic selling. And then what they do is they come back and they FOMO buy. So they chase the price up. They use price as the ultimate determining factor of everything. What should we use then? Charts. These falling wedges are great areas to be looking at potential entry points. You need to also use fear to your advantage, aka you love the idea of wild swings because it means more things are going to get mispriced. You could adopt value investing, looking at value and buying things that are undervalued, using that volatility to your advantage. And that's all I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys like. Special coupon code. We've got a Saturday question and answer session coming up this weekend. Love to see you guys there. Join the community. And special is that code. So we'll see you then. Catch you later. This is Finding Value.